Hey guys, it's me, Crossroads Roy. I'm here with the guest, Cantonese Cat. As you can see, he's not going to show his face. So,
Hey
but
everybody, Cantonese Cat here. Just figured, yeah, we've talked. I've talked with Roy for on and off for quite some time, and we actually have some messaging back and forth. And like he's a very cool guy. Not every single fundamental analyst like to talk to technical analysts because there's just a very very different kind of thing. So I'm happy to actually meet several people, including Roy. Amit's also one of those too. I mean, like you guys just actually are very, very open to kind of hear all sides. So we appreciate you and thank you for setting this up. I appreciate it.
yeah, thanks for joining. And I think that maybe we'll start there is just a little bit of your background, and we'll talk about fundamentals versus TA. We'll talk about some names, of course, the macro and the market, and maybe at the end, guys, if you have specific tickers or questions. We may always just say we don't know because there's a lot I don't know, but we'll take those kind of at the end. So, Kat, why don't we start there? Like, how long you been in the markets? Can you give us a little bit of your background, and then what brought you into like TA? Because that's not normally somebody's first entry to the market.
Yeah, I think thanks for asking that. I mean, the whole thing is I was in some kind of like very heavily academic training thing. I'm not going to tell you guys like exactly what I do because I don't think it ultimately matters that much.
Yeah.
When we're all like market participants, it doesn't like obviously to me almost like the background doesn't really matter. It's just whatever thoughts you have, whatever analysis you have to bring to the table. I think that matters more. So I'm just going to say I was in a very very academic field. I've been training for a very long time. I never really thought about like finance or like stocks or crypto or anything like that until really about like 5 years ago when I was done with my training, when I was actually getting my job for the first time and actually seeing money. So that was one of those things. I just want to make my money work for me, because I think it's one of those things. If you train for so long, and you're finally reaping the rewards and you want to sort of know what to do with it, that's kind of what I got out of it. And also Mrs. Cat actually has been a lot more financial savvy than I was, and I was just trying to play some catch up, and I think I kind of went overboard. So yeah.
Well, good for you. So do you characterize yourself more as an investor, a trader, or like what style are you?
Investor. I do some. I do plan on doing like the cycle trades in terms of like Bitcoin, in terms of like crypto, those kinds of things. But overall, I see myself more of like an investor than anything. The whole idea about doing technical analysis actually is because I just seen so many, like throughout, you remember how around like 2022 everybody just throwing all kinds of crap technical analysis out there. Like, just like,
yeah, yeah.
like, big giant arrow down. Like I'm just looking, I was like, man, come on guys. Like, and then I started doing kind of looking at the charts on my own, mostly out of spite of like what they're showing out there. And it just didn't really make a whole lot of sense to me. Even like Michael Burry is like sell, and he was drawing these like kind of charts that didn't really make any sense to me at all. So I was just like, let me just do my own thing. See, I did not expect to like actually have a YouTube channel. That if you asked me that in like 2023, I would laugh at your face. Like, what, I'm gonna have a YouTube channel? Makes no sense at all. I didn't think I was gonna have like like 30 something thousand followers on it. Like that, none of that makes any sense to me still. But I really just wanted to. I like pattern recognition. I have like an obsession when I like something. I just want to like look at it. I like problem solving. I like the idea of philosophy. And actually, to me, I think the market is a way to think about life, to think about the world. And it really gets you more up to date in terms of like getting in touch in terms of what's happening around the world.
Okay. So like with TA, it sounds like you're not just a pure TA guy. Like you're also looking at some fundamentals. You're looking at macro. You're looking at individual companies as well. Is that accurate?
I would say so. I don't think anybody can really be like a pure or something. Like that doesn't, really strike me as something that should be put in isolation, right? But when I try to do TA, I try not to put like a fundamental stance to it because it doesn't really make sense. Does it influence me? Yeah, like you know about the macro. Like I'm very much more contrarian than anything, and sometimes I could be contrarian to a fault. But I would say that I wouldn't purely just describe myself as like a TA cat. Like there's no such thing. Like you need to learn more about the world. You need to think about things. You need to try and make sense out of it. Even with technical analysis, right? Like I don't care to just draw sticks and lines or curves. Like none of that really matters. What really does matter, and I'm actually going to agree with you because I think that you basically said like 99% of the time fundamentals matter more, and only 1% of the time technicals matter, right? Like to me, I think they are all the same because what I'm trying to do with technical analysis is not just drawing sticks and lines. What I try to do when to do technical analysis is to try to see what the big money is doing, because the big money and the whales are going to have a lot more friends than we do. They're going to know more people. They're going to have more information, even though they're not supposed to have insider information. They're going to have a lot more information than we do. So the kind of moves that they're making are going to show up and influence the chart, influence the trend. It's going to show up as volume. It's going to show up as momentum. And that is what I'm trying to look at and trying to extrapolate to try to see what's actually happening behind the scene fundamentally, rather
Yeah.
than trying to capture a lot of the fundamental arguments, which a lot of times they don't tell you those kinds of things. Even if you have Bloomberg Terminal, they don't tell you that. They give you these like delay narratives sometimes, right? And then they can be completely valid, but they're delayed and the price might already been reflected. So what's the next move? Is it going to actually end up keep playing out, or is it just one thing that's trying to show you something that's delayed and trying to throw you off? I don't know. What do you think?
I mean, like a lot of times the challenges with the narrative is the stock will move one direction or another. And if it's not like a whole market thing, people always wonder why. And sometimes there's like a perfectly valid reason. And we'll talk about some of those, like with PayPal, like there's a big shift downward that wasn't just market specific last week. And, it actually kind of made sense. But oftentimes what happens instead is like the stock moved and they're like, well, we just got to figure out a reason. So let's just make something up that sounds plausible. And that's what happens a lot of times. And so that's not really, it's kind of like I think there's TA. A lot of it can be very, very sketchy. I'm not saying what you're doing is sketchy at all.
It could very well be. I don't know.
Like volume charts seem like it's something's very useful. RSI certainly. Looking at a lot of different types of indicators, and you're basically just trying to change the probability in your favor. But as far as like fundamentals, I think since I'm a long-term investor, like if it's a day trader, which I'm not, I would be a lousy one. Or even like just focus primarily on swing trading, I think technicals would be a lot more important than fundamentals, just because stocks don't have to move based on fundamentals over the short term. But long term, like fundamentals tend to wear it way out. And what I've at least found myself doing as far as a skill set, I think I'm very good at identifying quality companies. I'll get some misses for sure. And if I can continue to do that, even if I'm not buying at the best price or selling at the best price, I'll be okay. I'll be more than okay. But the TA side, like I think it's really useful for myself anyway, like in this kind of situation right now in the market, we see a lot of fear. And one of the reasons we know that there's fear is not just the fear and greed index of CNN being at 4. That can be, that can say some silly things as far as fear and greed when it just doesn't feel like it. But when you have bonds, when you have precious metals, when you have equities all moving aggressively in the same direction, that doesn't make sense. Not for long term. And that's what happens, either extreme greed moments or extreme fear moments. And so in that situation, people are not looking at fundamentals. They're just not. They don't care what the PE ratio is of PayPal, or that they're coming out with these awesome innovations and they're doing this many buybacks and Alex Chris has changed all these different things. They don't care about Nvidia's dominance in the semi sector and like what AI will do over the next few years. They just want to either make a lot of money if they're in an extreme greed scenario, or just get somewhere safe, and like maybe cash is the only thing that's still safe for some folks. So I think that's where TA is like really, really useful, is like because it really measures what a lot of other, if nothing else, I'll give like the baseline of TA, and I don't use much TA. There are some things that I use on a very simplistic area. And by the way, we'll get some examples here in just a moment from our friend Cat. But I don't know. Like, I think TAs can be very useful just because there's a lot of people that are looking at the same things. And so at the very least, if you're going to throw out all TA out of the window, you can do that. But you're making a small mistake because a lot of people do look at TA. And if everybody is kind of looking at the same things, then it becomes at the very least a self-fulfilling prophecy. But I like what you said as far as it like being related to psychology and human psychology. Like, humans are humans. We tend to have those moments of greed and fear and think about things somewhat similarly over long spans of time.
Yeah, those are excellent thoughts. I also want to echo that I also am not a day trader. I think a lot of people look at me doing charts, they think I'm a day trader. I think that's
Right.
not true. A lot of people that do charts are actually more like cycle analysis. You can actually do things that are more looking at the trend to see whether or not this is a favorable, buy here, or is it something that you wouldn't want to touch because it's, a falling knife without an end. There are different things you can look into that can help with your investment strategy as well. I actually use TA not so much to try to trade in and out. I use TA to actually try to reduce my fear of the market, because a lot of times the stuff out there that they put out there as like TA, and I think TA get a pretty bad rap because of that. It's because they're drawing lines and sticks and they're not giving any logic, and they're like very absolute with their ideas. I'm just trying to be more right than wrong. I'm just trying to identify the trend, and if there's a trend that's looking good, and if the investment thesis seems to be reasonable, then yeah, I mean, I'm not going to want to sell out of it, or I'm not going to want to, buy it if I think that it's going to be a downtrend without an end. So that's kind of my thoughts on that as well. So you can actually use it for more longer term thoughts to kind of support your investment thesis. I do know enough comfortably for myself in terms of like the bare bone fundamentals and things like that. I have a general idea, but I'm not good enough to like verbalize it. So I generally just don't talk about it. But I remember watching like you guys, watching like Tavis, watching Tanner, watching Amit many years ago. like, I was watching, and this is before I like start my YouTube channel. I only started YouTube channel for like about a whole year, But I remember watching you guys, and you guys have been around for a lot longer than that. And I was, really learning about all the fundamental thesis and between different companies, and that affected my investment in SoFi. That affected my investment in Tesla, and definitely affected my investment in Palantir for sure. So I want to thank you all actually for being there.
Awesome, man. Yeah, and like that's the one thing. Like, if you guys have no other takeaways, we're about to jump into look at a lot of charts and a lot of names here in just a second. But if you're new in the markets, figure out what works for you. You don't have to copy Cat. You don't have to copy me, Tanner, Amit, but find something, whether that's, usually short-term trading doesn't work as well for most people as the long-term investing. But if you find something that works, keep doing it, keep refining it, keep improving on it, and you can do very, very well, even if it's something different than somebody else that's really smart is doing. You just find what works for you. Let's look at the market, I think, first. So as far as like where we think that we're going from here, so just like fundamentally, like I think a lot of people know this is a little bit unprecedented as far as a drop. Like, you normally don't get two massive drops like that back to back. We were at one point in the S&P 500 down about 6%. One more percent, we would have hit that first pause in the market where they would say, hey, take 15 minutes off, no trading at all. And that's only happened 5 times in market history. They implemented these rules and then revised them a little bit later, but from that 1987, that Black Monday event. And 4 of those 5 events were all around COVID. So this is, it was a very, very aggressive drop over the last few weeks, but especially this week. And so myself, as far as like fundamentally, I see markets hate uncertainty.
Mm-hmm.
And the economic policy of the United States, specifically tariffs, has introduced a lot of uncertainty. And even if these were like concrete numbers, like these are for sure what we're going to do, I'm not sure that the market would believe it right now, just because it's seen how fast that Trump and his administration can pivot, whether that's good or not. Like, it just, that's the reality. And so I think until the market has some semblance of certainty as far as, okay, good news or bad news, like this is what it looks like, this is what we think is going to happen as far as the economy and names, and then you can begin effectively pricing in. Right now it's in a shoot first and ask questions later type of mood. So I feel like we need to have a little bit more certainty as far as like what can be the possible worst outcome and downside. Somebody asked in the comments, what's Smoot Hawley 2.0? And Smoot Hawley, I have a separate video on this too, I think a couple of videos ago, was a very aggressive tariff raise by the United States in 1930, I think in October. What happened basically is the Great Depression had already started. It wasn't called that at that point. It was just a recession. And the United States, some senators, these are Republican senators, looked and said, hey, what's going to help us is tariffs. And the president at the time, Warren G. Harding, said, okay, yeah, let's do that. Nothing too aggressive. But boy, they went big. And then they ended up passing those. Hoover signed them into law, despite a lot of economists and Democrats saying, please don't do this. It's going to make things a lot worse. And now, retrospectively, we look at and we see it damage international relations, it damaged global trade. Basically, it exported what already would have been probably a tough time, making it like kind of a worldwide depression. And of course, it gave us the Great Depression. Now, it still would have been rough even with that, but caused a lot more damage than good. And I think, if the tariffs stick as they are, I'm not calling for a Great Depression or anything like that, but I'm just saying there could be a lot of pain. And the challenge with this is with economic policy, it's a different environment now. Like, that's 100 years ago, almost 100 years ago. A lot of stuff has changed. Human psychology has not. And that lasting damage, it lasted, really into World War II. So even if like 3 months from now there's a pivot, there can still be some lasting damage from this. So, but I do feel like I don't know if we're going to lose the bull market or not. Like, we could on the SPY. I know we technically did on the NASDAQ. But yeah, that's where I'm at. Is like, there's a lot of uncertainty. There's a lot of fear. Things can get a lot worse if we don't have resolution. Where do you stand? And I'll throw your chart up here if you want to show us.
Oh no, I mean, I'm gonna basically, this is a flash crash. I mean, I think what do you think is happening behind the scene that's causing this? I honestly think that there are we're at a juncture. I don't even think like levels really matter that much anymore, because we're at a flash crash. Like, it's somebody honestly basically mentioned like there are these like gaps that were opening up where the market just go down a few percent, before market open, just kept on going down, right? This is highly unusual. This is something that actually it wasn't even really seen during the it wasn't even seen that badly even during the 2022 market crash. Because if you're looking back in 2022 market crash, it was a lot more systematic, where it just goes down like a few percent, and then hey, give you a little bit of hope, pump back up here, again rejected, go down a few percent again, give you more hope, go down a lot more, give you a little bit more hope. This is a lot more systematic down. And this is the QQQ, so it represents the NASDAQ. So ultimately, I think it went down like 37%, from top to bottom. But the entire time is kind of giving you a little bit of hope here, a little bit of like systematic thing going on. Whereas right now, like, there is not really much of a balance. It's just a flash crash all the way down. This really reminds me a little bit more, and this is the Bollinger Band on the daily, by the way. This is usually like whenever things are like way outside the Bollinger Band to the upside or the downside, is usually like bad news. Like usually it shouldn't be there. Like during the flash crash of COVID, you can see how you have a daily candle that's just like way underneath the Bollinger Band. That's not sustainable. So minimally, you should have a little bit of a bounce, right? Like right now, the COVID crash was, let me see here. COVID crash went down about on the NASDAQ went down about 30.55%, right?
Right.
We're close. We're not that far.
I mean, like, honestly, I think I did a great job of spotting what I thought was a local top. I mean, maybe it's the top. We'll see, but there was a lot of indicators there. But like this far
yeah,
down, I did not see it all. I did
yeah,
some hedging, but like not nearly enough.
yeah.
In hindsight, and it's always 2020, right? But man, it's been
It's
precipitous.
ridiculous, like 22%. So the way I see it, yeah, are there any like bearish divergences that like you can pick up to say that, hey, a downtrend is happening, be careful, yeah, but on the other hand, the market generally just goes up over time, right? So if you're looking at things like RSI, things like that, on the weekly, that things are getting a little bit tired. Generally, if you look at these momentum indicators, like I'm not even going to like too much detail because I think in general, whenever your price going up in the indicator down here called RSI is going down, that things are getting a little bit tired. So that you're going to have some correction, right? Just because it looks like the uptrend is getting tired and tired, and you just keep on going up here with a little bit of declining RSI, sure, but sometimes things can go up on declining RSI for a long time. Like this thing over here just kept going up on bearish divergence for a long time, right? So the thing about technical analysis is really, really, really tough to know exactly when a flash crash like this is going to happen. Are there any warning signs? Should you have hedged? Things like that. I think it depends on your style. To me, I always worry about like using puts. I always worry about using the leverage, like short QQQ or whatever, like because market generally goes up over time. So
Yes.
I can handle these kinds of volatility, and these are flash crashes. Like these are not the systematic like 2022 crazy crash, right? The other thing too is I'm going to go back to the 2-week chart here to kind of trying to distinguish between whether or not this is a flash crash like it was during COVID, or like it was during the late 2018, like the first tariff slash taper tantrum kind of flash crash here. Whether or not we have more similarities between these two in here, or do we have more similarities between like what we have here? So far, it seems to be more like, okay, even just zoom out. Over the last 30 years, there's really only been like two major crashes, right? One is the 2022. The other one is the Great Financial Crisis, right?
Right.
And if you're looking at the 2022 minimally, when you get so far down, overextended, minimally, you're going to end up having a bounce, and you're going to end up getting into resistance here, and we see how it reacts to the resistance, right?
Now I
Yeah.
call those dead cat bounces. Is that offensive to you?
Very no, because you didn't call it that Cantonese bounce. No, that Cantonese cat bounce. I wanted to be more specific than that. But like to me, market crashes can happen at any time. The time to exit is to see how the reaction is at the back test, right? That really to me is the more important than anything else. Like right now, there's no back test. There's just downtrend. It's like a flash crash all the way down, right? When you have these kind of flash crashes down, generally actually makes it more likely to have more like V-shaped recovery. Again, I can't guarantee that that's going to be the case, right? It depends on how it reacts when it gets there, right? Same thing if it crashes down. It depends on how it reacts when it gets there, right? If it just slices through like it's nothing, then you're fine, right? But if it's just like really, really weak back test and it just gets rejected right there, then you're worried about further downtrend, right? I do worry a little bit because this downtrend has been very vicious. This candle won't close until the end of next week, by the way. So this could all potentially be just like a big giant wick, and it's just end up being back inside a Bollinger Band. Who knows? But I would worry if this continues to be like that negative sloping, because if it comes back, if it's negative sloping, that actually usually is like a stronger resistance. You might end up getting rejected more. So am I worried? Well, it depends on how it reacts up here. But so far, it still behaves more like a flash crashes. How many flash crashes have we had that didn't really turn out to be a major crash? Like 1, 2, 2015, 2016, right? 3 and 4, right?
Yeah.
And then 2011, right? And then how many major crashes have we really had over the last 30 years? Really 2, 2022 and 2008, 2009.
Yeah.
So,
So, question for you.
yeah.
Leo had asked cat buying here. So are you changing anything that you're doing? Did you sell? Did you hedge? Are you just buying all you can? Are you slowly DCAing? And like, what's your strategy with this right now?
I'm always going to DCA on a weekly basis. Like whenever I have income, I'm always going to put money into something. I'm kind of trying to find things that have like relative strength, because I don't like honestly, it sounds crazy. I don't care if the market or my stocks go down 20, 30, 40%. Like I really don't care. At some point, if you want to be in high beta play, you have to be able to tolerate the volatility. And if you're going to be in something like Robinhood that can go up like hundreds of percent, you have to be able to tolerate like a 40% drawdown. That's just like a reality, right? So I'm always going to be buying something, but I always like to try and find like relative strengths and trying to see what may be playing out in the cycle, things like that. So I'm buying, I'm rebalancing, if you will. About 2 months ago, I actually started rebalancing away from Nvidia. I know you've been buying Nvidia. We're going to talk a little bit about that too. But I've been rebalancing away from Nvidia, actually trying to get a little bit more into like small caps and getting a little bit more into like Tesla exposure, things like that. Just because I see some things here, you know, like one thing I like to do is like do these comparison things, which I'm sorry, I'm not like jumping around, but I just kind of want to show you that, you know, like the whole idea about you can do these like ratio charts where you can see the trend. You can clearly actually see that really ever since June of like 2024, this is Nvidia over Tesla, right? So if this does really well, then Nvidia is beating Tesla by a mile, right? And it's been doing that for 2 years. But since June of 2024, there's a character change, right? So Tesla actually seems to be outperforming Nvidia because it's been forming, like this chart here, Nvidia over Tesla has been forming lower high and lower low, right? Right now, it's just forming another lower high, right? So to me, I think the benefit may actually not be necessarily be in Nvidia anymore. I think money might actually start to kind of rotate into Tesla here a little bit more, even though the fundamental thesis may not necessarily play out quite just yet, even though the earnings may not, you know, necessarily reflect that. But I think there might be some big money behind the scene that might know something that we don't. Now, if I pull out the Ichimoku cloud, you can see one thing that technical analysis like to do is to see whether or not certain levels are being flipped from support to resistance. If it flips from support to resistance, then it's bearish, right? And if it flips from resistance to support, then it's bullish, right? For example, here you can see like clearly there's a horizontal level over here that was resistance here for a long time. It got flipped into support, and then it just went up a lot higher, right? What's happening over here? You don't even need any indicators. You can see that there's a support level over here that had been broken, right? And we back tested as resistance. So to me, I think that most likely Tesla is probably going to end up outperforming Nvidia moving forward because of that. That's kind of my thought. So I rotate, I try to find opportunity, but I'm never really like out of the market. So
well, we'll maybe start on those names in just a second. There's a couple of comments that kind of go along with this. So as far as like the overall market, so 490, this is TPL Juju, 495 and 474 IMO are the lowest it will go without seeing some actual long-term effects to the U.S. economy. Think that sounds reasonable? Can we go lower? Is it just anybody's guess at this point?
Yeah, what level are we talking about? Like, what about COVID?
I mean, we could if we retrace that far. I think that's like an all-in, or you know, barring like World War III or alien invasion or something like that. Like, there's a point where yes, maybe you're catching a falling knife, but unless you think that the United States is going to implode and all these companies will just go up in smoke, that's an easy buy. Like right here, the challenge is I think we can go quite a bit lower. And we don't really know. Like it's uncharted waters. I'm still 90% invested. For those of you that don't know, I actually sold last week. I sold at right at the open on, or maybe just after the open on Thursday. Basically, almost all of my options that expired in 2026. I just wanted a longer expiry. Like as far as equity stocks, didn't make too many changes there, but I wanted some more cash. I realized like, hey, I messed up. Now, short term, like that certainly worked out. We lost a lot on Thursday and Friday. That preserved some, and I've got pretty much 90% of my Palantir position, which is like half my holdings, hedged. So a lot of people are like, "Oh man, you're into options, and you're probably like lots of pain." It's like I think I was down maybe like 4 or 5% last week. So maybe a little bit more, but it was not as bad as it could have been. Not trying to time the market or anything. It's really tough for me, like to see, barring like a fundamental shift, which we don't have any guarantee of, like where the bleeding stops. So, but yeah, any guesses for you, Kat? Like what would be like the I'm going all in part for you on the, you can do the NASDAQ or the S&P 500.
I mean, I'm pretty much still all in. It's just whether or not to increase my leverage or not. I think
Yeah, yes,
that's the
a big one.
question. Yeah, that's the big question because I honestly, again, I don't care about the market volatility that much, and also because I wasn't listening to the fear back in 2022 throughout 2023. Like most of my positions are still up a lot, even if it goes down like 40 or 50%. Like I don't care, and it's not necessarily the style that a lot of people would do. Like if there's some traders out there listening to me, they're just like, what do you mean? Like you do charts and you're able to tolerate that kind of volatility? Like doesn't make any sense to me at all. Well, for me, I have a day job. I can't trade in and out. I'm more looking in terms of the whole the whole idea in terms of like macro, in terms of what these things generally happen based on probability, right? Right now, what's happening right now is you can look at levels all you want, but the hedge funds are basically getting blown up.
Yeah,
People are basically getting margin called left and right. There's a lot of forced selling, right? It's going to go lower, I think. You know why I think it's going to go lower? Because there's no wick here on
yeah,
the
yeah,
monthly chart. There's no wick. Like there's honestly like the S&P 500 is probably going to go lower on Monday. Like that's the truth. How much lower? Anybody's guess. Is it going to go down here to this magical level over here around 497? Maybe we'll find some support. Maybe it wicks down underneath of that. Like it found support over here. Is it going to find support over here? Like you can do all this stuff, but right now, basically, the reality is this: when you have hedge funds getting blown up, and when you have people getting margin called left and right, and when there's a lot of forced selling going on, like you can't, you just don't,
yeah.
you don't have to buy pressure right now. It's probably going to go down further early next week. Is next week going to end up finding a balance at like some of the levels down here below? Maybe, but honestly, nobody really knows. Like you can talk about this level being broken and then the market's over and things like that. Again, I think that we're way too far stretched to the downside. That is it going to go down here to the 2-week Ichimoku cloud like at like 480? I mean, you can talk all that, but right now I don't think that's really the discussion here. The discussion that I'm really trying to say is, look, we're too far down to the downside. Things don't go straight down like that.
Right. Yeah.
You're going to have a bounce, right? We want to see how the bounce reacts, and depending on how it reacts, that's like the time to sell is probably not now. Again, I'm not providing financial advice or anything, but the time to sell is probably not now. The time to sell is probably to see how it reacts whenever it has that. Is it a dead Cantonese cat bounce, or is it going to be a V-shaped recovery, right?
Yeah.
Like there are really two scenarios here, and you cannot really predict when the flash crash is going to happen. But what you can do is to see how it reacts when it backtests some of the levels up here above, right? So that's kind of how it is to me. I think things are just like unsustainable. You can't have these daily candles just way outside the like lower Bollinger Band here for too long. So I think that you're going to have a balance, but what happens after that, I think, might matter more in terms of what I think would happen moving forward. Not so much that this vicious downtrend is going to hit a certain level and that's it. Like I don't believe that to be the case, but that's just my own opinion. So.
All right. So two quick ones, and then we'll get into Nvidia and Tesla, and then some other names as well. So Niall said, couldn't you argue markets are still overvalued or approaching fair value, e.g., Buffett indicator or historical price to earnings ratio? With the Mag 7, I think you probably could. Not all the Mag 7, like Google's actually been pretty reasonable. Meta's not even that bad. And Nvidia, looking at the growth rate. But if you're looking at it like just based on PE ratios, you're missing the actual growth. And then you have to also keep in mind that markets are forward looking. And the market is not wrong on AI, or it hasn't been wrong on AI. Like this is one of those things where I kind of isolated and identified them before we went into this AI hype cycle. And that's one of the reasons why I went 90% in the Palantir is I'm like, okay, this is a great company. There's going to be this massive AI wave, which, if it plays out like I'm expecting, then this is going to be like a new roaring 20s. And that's still possible. that doesn't mean that we're not in distant pain over the short term. So I think like what's coming as far as actual growth and acceleration for the entire U.S. economy, depending on how the tariff stuff shakes out now, that's a big question mark. Is the market was accurate to be pricing it in? Now, did it get a little overexcited in certain names, including Palantir? Yes. Yeah, I wouldn't have touched Palantir anywhere near that top. If Palantir retraces to 55, I'll begin DCAing slowly there. Any thoughts on that piece, like the market approaching fair value, Buffett indicator, anything?
I want to say that I love Warren Buffett. I think he's great. I think his indicators are great. He also called Bitcoin red poison. And I think that the entire thing, I just took the time to like draw this. These are my thoughts. Okay. And the Buffett indicator happened. I guess it happened before all this, right? Like he is an incredible investor. He looks at value. He doesn't really get into like innovation or anything like that. That's not his jam.
Right.
I think for both you and I, we are more into the innovation, things like that. I want to just kind of take a step back here. This is like the SPY, or S&P 500. There are a couple of things I think is very important to talk about. First of all, the great crashes happen during the dot-com bubble. We're not experiencing the dot-com bubble, by the way. You can argue all you want about Palantir being overvalued. They're producing something, and they're going to continue to produce something, right?
And so it's a big moat.
Big moat. Yeah, like they have a big moat, and they are basically at the juncture they might just take over like the majority of major businesses, which is just absolutely incredible to think about. As opposed to like what happened like with Amazon, with all these other companies, like it was ridiculous PE ratio here during the dot-com bubble. It just shot up way too far, way too fast, right? That was ridiculous. All of these like anti-shell companies and whatnot. So we're not experiencing that, right? The other thing was when it was crashing, what did everybody do? Well, they ended up rotating to like small caps, financial housing during this crash over here, and then it ended up building a big giant housing market bubble, and that ends up just crashing everything again, right? That's basically what happened during this period of time. And guess what happened? There's one very important thing that happened that basically may make the Buffett indicator, I'm not going to say obsolete because I don't know, because I'm not very smart, okay? But
and that'd be bold anyway to say.
But I'm just a cat. Cat has low IQ. But banks can't fail.
Yeah.
If banks can't fail, and if they keep printing money over time and banks cannot fail, what's going to throw the market off? You're going to end up having money just, flowing into the market. You're going to end up having more expanded PE ratios. And you actually have more companies now in the large caps that are producing a lot more innovation and for the future and have more growth compared to what it was back here, right? When you talk about like the top 10 companies back then, there's like oil companies or like some stuff they make a lot of money, but they don't really they don't have any innovation or anything like that, right? Now you're talking about companies like Amazon, like Google, like Meta, like there's a lot of growth ahead of them, right? I would even argue Tesla, right? So does that mean that because the large caps actually, the composition of large cap companies now are different compared to what the large cap companies are when these market crashed? Would the Buffett indicators still be applicable? Can you really compare the current valuation compared to the past? I don't know. Like I'm going to make the argument saying I don't know that. So, am I off base here? I mean, I don't know. I'm just talking.
No, I think that's very like that's a hard thing is like we're looking at tariffs, which the United States has not. Trump did some, but it was very gradual. It was not nearly this aggressive. We've not done this aggressive really since Smoot-Hawley. You can argue and say that there were certain times where we did since then, but they have not been a big force in the U.S. Markets for a long, long time, and the world is very different. So we don't really know how things will actually shake out. There's a lot of different ideas. A lot of people I respect on both sides. I tend more towards the pessimistic side. Like if these persist, if they're in place, if there's continued uncertainty like this, rapid shifts in policy, this is going to be very, very detrimental. I'm not a big fan of tariffs at all. I could be wrong. I'm not an economist at all. And then there's this by E Gold, High Cross. What do you see as the best likely scenario? Best likely scenario is what I've hoped for all along, is that this is just a negotiation tool, or mostly like maybe 10% flat tariffs. And there is, as a result of negotiation, a lot more free and fair trade. With the numbers that the Trump administration put out with that press conference earlier this week on Liberation Day, I don't know if that's the case. I know that with negotiation, he likes to, put something just outrageous as a first offer. And so that could be the way that it's headed. I'm not sure. But in that scenario, okay, so we have a lot more global trade happening, a little bit more industrialization here in the United States. At the same time, you have a collapsed 10-year yield for Treasury for a lot of different factors, which will help the United States government refinance their debt. It'll help a lot of companies that are in this debt cycle where they're like, man, we don't want to refinance right now. A lot have turned to senior convertible notes, which is not great for shareholders, but they'll be able to refinance, and individual consumers will as well with, and that'll really unlock the real estate market, which has largely been frozen over the last year and a half. So like, I wouldn't say that that's like a extreme likelihood, but I'd say, there's a good 10-15% chance of that shaking out. But the thing is, that has to happen pretty quickly. If we don't see anything changing over the next month or two, a lot of the second order effects begin to kick in. And it's not going to be as bad as a lot of people in the doomsayers say, but it's not going to be real good or real pretty for the markets. What if you have anything to add on that, Cat, go ahead. But otherwise, we'll go ahead and jump in and look at your pick, Nvidia or Tesla first.
Yeah, I mean, I just want to spend like maybe 1 or 2 minutes to kind of weigh in on that too. This is, you mentioned about the 1930s tariffs. The world is very different now compared to back then too, though, right? You're talking about back in the 1930s, you really don't have American dominance. It's like, like America is like not very, it's just another country, and a lot of things have changed and since then. So if anything, I think the world is just more and more dependent on the US than anything. So the leverage might be different. And I think that the negotiation tactics is what is happening. I completely agree with you. Also, since then, there's just like a lot of really ridiculous things that happened with this president that was just never thought about before, right?
Yeah.
Like Stormy Daniels, like what the heck is that? Like impeached presidents getting reelected. Like what are we talking about here? And also this, you also have a president who's like the most focused on the market ever.
Mm-hmm.
He's like the most focused on the market from his first term, more than any other president. And the market's crashing, and I just have a hard time believing that he's not gonna like be aware of what's happening, and that he's not maybe got some other things like tricks down his sleeves or anything like that. I actually think that this term that he has is very, very different from last term. Last term was extremely disorganized. He came in, he didn't really know what he was doing. This time, Doge. Like, I'm not saying, I'm not political, I don't care whether or not it's the right thing to do or wrong thing to do. But like, what I can say is whatever he's doing very efficiently. That's all I can say. And this is like with a great agenda. Like, he's not even messing around. He found the right people to handle whatever agenda he wants to do. Again, I'm not saying what he's doing is right or wrong. I'm just saying, like, I've never seen him being this effective ever. So this is
and it's, I mean, like, we knew that Trump would be more active than Joe Biden's administration, but like this is kind of shocking. And I think that's one of the factors too of the pullback, is even if all this tariff noise wasn't happening. By the way, I'll show like one picture here, and then we'll jump into, again, your choice, Nvidia or Tesla. Like this, it was the initial reaction. This is like a horrifically timed post for myself. There was about like 2 or 3 minutes where they mentioned the kind of the 10% across board tariffs, and like the market pumped just because it was expecting a lot worse. And it's like, hey, that's actually downright reasonable. This is great. Gives us certainty. We can go forward. And that didn't last long. So
yeah, that was pretty vicious. That was amazing. but it was also one of those things, like, he knew that it was going to do that. He knew that it was going to create market uncertainty. Like, he knew. And the administration knew, right? Although it's supposed to kind of be like a well-kept secret, nobody else is supposed to know. Somebody knows. Anyway, I'm not going to speculate any further because I don't want to get in trouble here. But Nvidia.
All right, Nvidia. You've been scaling out of it. You mentioned that earlier. I've been adding in. So why don't we start from the TA perspective, and I'll add some fundamental analysis, what I'm seeing, and we'll go from there.
Yeah, so absolutely. I think that the company itself, there's nothing wrong with it. It's going to be around for a very, very long time. They are creating a lot of remarkable innovation. Everybody's dependent on them. Like that, I have no question about any of that. The only question would be more from like a liquidity cycle kind of thing, and also from stock cycles kind of thing. Because again, I'm more thinking about, and they're always going to come with these narratives that goes along with it to kind of try to shake you out, right? For example, I remember back in like October 2022, they're talking about how there's like the greatest stockpile of chip inventory ever, right?
Right.
And that was the bottom. And they kept talking about how there was the greatest stockpile of chip inventory all the way through like 2020, like the first half of 2023. They're talking about chip inventory, and it made no sense because these narratives potentially might be delayed, right?
And now it's shortage.
And now it's shortage, right? So the shortage idea is coming out. So why is Nvidia going down? Well, is it because of liquidity cycle? Is because there's some narratives that are not yet coming to fruition. Maybe it will shed light later on, but you cannot deny the weakness that Nvidia is experiencing, right? This is the Bollinger Band. This is a monthly chart, so basically you're looking at each candle. Here's a monthly candle. And it has, I'm showing you 3 different cycles here, right? Cycle number 1, right? Cycle number 2, and cycle number 3. And the Bollinger Band is basically calculated by how much volatility there is. At the beginning of the bull market, when it's very, very impulsive to the upside, you got price kind of riding up along with upper Bollinger Band. And the Bollinger Band expands to the upside to the downside. Like it goes all the way down because there's just so much volatility. It goes all the way down to the negatives, right? Until the trend gets exhausted and you have a slowing down of this bull trend, that's when the Bollinger Band starts to contract, right? And whenever it starts to really contract here for Nvidia, that's when the bear market happens, right? That happened over and over again. You can see the expansion, contraction, right? And then you have the contraction, you have the downtrend. What's happening right now? You have a very, very strong uptrend. Nvidia has gone all the way up to like 1,300%, all the way from the bottom here to the top. A lot of people have made a lot of money from it. A lot of people might be starting to kind of look around for different opportunities, and they might want to distribute their shares into other things, or they just want to exit the market. It's hard to say for sure, right? But right now, we're just losing momentum. Now, I'm not saying that you're going to end up breaking underneath this 20-month moving average like it did over here, I don't know that for sure, right? What it could also do was it could also just bounce off the 20-month moving average and just keep going up, right? But all I'm saying is that you have some weakness here that I didn't like based on what it did from the previous cycle. So I just ended up scaling out it over the last few months, and I went into other things, right? It doesn't mean that Nvidia is going to come all the way down to the 50s or 60s. Like, I'm not saying that at all. Nobody knows that for sure. But I just feel that there is some weakness, and then the uptrend seems to be exhausted, and it seems like money may be rotating to something else. That's all I'm trying to say. So, now with that said, I actually do want to hear your thoughts in terms of Nvidia. Like, I know that you are scaling in, and honestly, it's one of the greatest company ever. So long term, none of that probably matters, But just trying to learn in terms of like your thoughts in terms of like the timing, and things like that. Why do you want to build a position now? If you can share some of that with me.
Yeah, so essentially, Nvidia is continuing to grow and grow very well. It's not going to do what it did as far as a stock or as a company, from 2 years ago. But looking at this AI wave, like I expected an AI fatigue wave to hit actually earlier. So I was wrong on the timing of that. I didn't try to time it. I just knew that was a reality, and that would be an opportunity to either add more to my Palantir position or look for another AI related name. But as far as like what AI is actually doing, as far as like the opportunity over the next 5, 10 years, this is just the beginning. And looking at what Jensen Huang and then Nvidia as well, like this is not just a graphics card manufacturer like you could argue 10 years ago. They're in software, agentic AI, data centers. They got Blackwell coming out as well. There's an immense demand for their product, and yes, there's competition. China comes out every once in a while, like, oh, they're not environmentally friendly because yeah, China so cares about the environment. No, it's smoke and mirrors there. Amazon, they do have their own Trainium, CPUs, but you're looking at what Nvidia is building, and no one questions that the revenue is going to be there over the next 2 years. People do question. They say, okay, well, won't CapEx at some point just kind of cap itself out, and they'll just say, hey, we're good. Every once in a while they'll need to refresh, their chipsets, but that's going to be a lot later than what people expect. That's just not how technology works. And you're looking at the comments like from this last earnings cycle. And Quarter, by the way, is a great app. If folks are listening are not in on that, it's a free thing that you can do and you can download, and you can search for certain terms or look through transcripts of certain companies. And you look at every single one of the Magnificent Seven and what they say as far as their CapEx spend on this technology. And it's not all going into Nvidia, but a lot of it is, and they're all saying the same thing. Every single one of them, even though it would be in their best interest if this wasn't the case, to just be like, hey, yeah, we're taking it easy on some of the CapEx stuff. But they're all saying, no, we cannot get enough. We just cannot get enough. It's unprecedented demand, and they need more and more. You look at Sam Altman, not publicly traded, but like every week he comes out and says something similar. And again, it would be in his best interest to be like, yeah, we're good for a while. Now, what could happen is with, I mean, that's a top signal, right? But what could happen is that just because of the uncertainty right now, and there is a lot of uncertainty, they might level out that CapEx spend a little bit, which means a little bit less revenue for Nvidia, SMCI, AMD, and other players that are in the space. But the reality is, like, I don't see a scenario where Nvidia is not instrumental in the back end of this AI wave over the next 5+ years. I think that this will outperform the S&P 500. I'm not in it for like a 5x or anything like that over the next 5 years, but I could see an easy from here, like an easy 3x over 5 or 6 years. And that's great. Like, I'll take that all day of the week. So it seems like a prime opportunity, especially at the valuation it's at. I was buying it. I think initial buy was like 117 or something. It's 97. So it's just easy money. Now, are there better plays out there? Probably there are, but this is from my perspective, short term, anything could happen. Absolutely anything. Long term, it feels like easy money to me.
Yeah. I agree with that. I mean, I'm not saying that Nvidia is not a good company. Like, I think the things that they're doing, the dependence that pretty much all the other companies have on them are just going to be, absolutely incredible. I don't think anybody can really even catches them up. Like, AMD is not even like near the ballpark, like, and people are even talking about Intel. I'm like, why? Like, there's no reason to think that they're not going to be the leader of their industry. So you might be right. I do want to point out this one thing here too, which I think is a pretty interesting chart here in terms of like innovation, in terms of AI and things like that. Now that we're talking about that, this is a 6-month candle chart. So all of these candles here represent 6 months, right? And again, remind you, whenever things get outside the upper Bollinger Band, is too overextended. Whenever things get a little bit, under the lower Bollinger Band, is too overextended to the downside, vice versa, right? So basically, you're really talking about like none of this really matters before the Roaring 20s. None of that really matters because this is not really like anywhere near what the current economy is. But the Roaring 20s, you have something that is like extremely unhealthy, right? You have all these different candles here closing above the upper Bollinger Band here, like how many years in a row, right? 1, 2, 3, 4 years in a row, right? You're gonna have a crash because you're over leveraged, right? Yeah. And the same thing happened with like the 50s, 60s, and 70s. There's a lot of inflation going on because they're printing money for like Vietnam. They're just doing all kinds of things here, and it really kind of just racked them, and it's just kind of slowly kind of rolling over. Eventually, at the touch the low Bollinger Band, that's when you reset and you're able to go up again, right? What happened to the dot-com bubble? You have candles that are closing above the upper Bollinger Band here for how many years in a row? 1, 2, 3, 4, 5, right? What are you going to get? You're going to get a crash. You crash for 3 years. And then you end up trying to go back up again, but it has to touch the low Bollinger Band here to completely reset the entire market, right? To me, I think the market would only like crash if it's like way over leveraged for way too long.
Right.
That's to me, that's the case. And I think that right now we were a little bit overheated. We're not experiencing those crazy like 4 or 5 years in a row kind of thing. So if people saying that this is a bubble, you'd be surprised. Things can go a lot higher, right?
Yes.
We were a little bit overextended here during the money printing, spree in 2020, 2021, and we corrected that with 2022, right? Guess what's happening right now? We're a little bit overheated, and so far we're correcting. Right? That to me, that's what's happening. So as far as I'm concerned, I think your thesis are going to work out just fine. Nvidia is an extremely volatile stock, and it can do some pretty insane things. It can drop down like 80% just because it wants to, right?
Okay. You're not saying 80% from here.
No. I'm not saying 80%.
I would own no other stocks, like nothing. It'd all be Nvidia.
No. I'm not gonna. No. I don't want you to let you think. I'm just saying that it can, because it did drop like 70% in 2022, right? Yeah. So you got a lot of So you got a lot of deleveraging that happened there. Here it dropped about 57%, right? Yeah. So I think that with very, very very high beta stock that ran up, like how much did it run up, right? You're talking about Nvidia running up, 1,300%, right? So be prepared. I think it's completely normal. It's not out of expectation. There's already down like almost 40%.
Yeah, right. And that's not shocking. That'll happen even in bull markets. So
exactly, that can happen in a bull market. It can, and very well this level could end up holding, depending on whether or not Trump end up reversing his policy or whatever. If but there is a potential for it to go down lower. I don't want to say that it's not, right? Like it can go down another 20-30%. Who knows, right? If you're able to stomach the volatility, there's always the downside risk as there's an upside risk. And as long as this is an investment, and you believe in the company, and you see what they're doing, it could go down if the whales wants to rotate to other things. It's all about a liquidity game, right? Like you said, even if the fundamentals work out well, it doesn't necessarily always have to work out immediately. So
let me add on there too, like this is not specific to Nvidia, and we'll pivot here to Tesla. I know you shared some TA stuff on Tesla briefly, but be careful with margin, guys, or any form of leverage, and with risking funds that you cannot afford to lose, that you need to have within the next 5 years. Like if you can catch falling knives all day if it's just fun money or money that you're not going to miss over the next 5 years. But if you go into margin, like you can lose your house, you can lose your wife, you can lose your car. Like it's your money. Do what you want, but man, this is not a great time, personally, from my perspective, to go in on margin or high degree of leverage. It's time to do the opposite and rotate into things that you have higher convictions on. That's, for me, one of those is Nvidia.
Yep. You have to have some understanding about the potential downside risk before you get in, so you know what your risk tolerance is. I don't have margin. I don't use options much, actually. I'm all shares. And I sleep well at night. Like it doesn't, if it drops, if I hold Nvidia, if it drops more, like whatever, it's going to come back, like it's just going to give it time, continue to work my day job, get more liquidity back to my family, and, invest in what I believe in. I think that's a pretty good strategy as well. So
Tesla then. So for myself, I've actually reduced my Tesla position. It was not intentional, strategic, or anything like that. But what happened is, when they were trading in the 400s, I'm like, okay, this is pretty silly and aggressive. I didn't sell then. I sold like 360, 370 because I was buying some new positions at Nvidia. And I was like, I need some more money for this position, and I don't really want to wait at these prices. And so I'll sometimes like shave, a few shares, 5, 10, 15 shares here and there, to round up position. I did a little bit more aggressively with Tesla this time, with the intention to rebuy, whether it's higher or lower, by this time. And then I began seeing a lot of the issues that Tesla faces, and it, a lot of it is like he is one of the faces of the administration, and so when it comes to these tariffs, like Tesla's been not only singled out, like Google and PayPal surprisingly were also singled out by the EU, which is like really weird. Like why are you hating on PayPal? Stop it. But uh, there is definitely some brand damage. Now, we don't know how long lasting. We don't know, the full impact. Tesla still has some great products, but there are people like legitimately, they're not just making this up and blowing smoke, that will never ever buy a Tesla, or at least not as long as Elon Musk is CEO. That would have in the past, and that's not a great thing. Now, some of that will blow over, over time. It just will, but it's a tough spot. At the same time, they're facing a lot of uncertainty with tariffs, and they're also in the middle of rolling over this Model Y refresh, which I think will be great in hindsight. But that's a painful process because you drop off volume, you're selling for lower margins of the old Y. It takes a little while to scale up, and I don't know. I think that long-term Tesla will be fine, but there has been some damage. And this is a stock that trades very much on a narrative, and we're seeing that in the price action. So myself, I'm still a Tesla shareholder. I do plan to continue buying at some point, but right now I'm just basically freezing almost all buying. I have a DCA on Nvidia and on Bitcoin, and that's it. I will start DCAing if I'm under a 10% allocation on Robinhood after April 25th, but I cannot buy or sell any Robinhood until after that date.
Yeah, I think those are actually some very good thoughts here. I feel like I feel like we're gonna have a friendly debate here, because I was writing things down on my little piece of paper on all the points that you have. No, and those are a very good point. I just have a few things to add to that. First of all, are people still holding Spike? Are retail still holding Spike against Robinhood from what happened a few years ago?
Absolutely.
Right? But their business model is still doing pretty good, right? Why is that? Anyway, we can go get there when we get there. But
so one of the differences in like some pushback in that, and I'll turn it back to you, is what trading platform you use. Like no one has to know that, right? Nobody is on Robinhood or Schwab or Webull just because it's like it's a what's the word I'm looking for, a symbol of like who you are as a person. And I'm missing the word. So I'm sure somebody will put it in the comments there. But the phone that you use, the clothes that you wear, and yes, the car that you drive, for a lot of people are very important to that symbol. And more than just trendy, I'm looking for a different word there. But regardless, like it's a little bit different. Like a lot of people will not buy and wear something, or drive in something, or talk on the phone using something if it ends up being against their core values.
That's
and
fair.
Nobody cares about like software, so it's just
that's fair.
Well, like even drinks are the same way, right? But
yeah, I think the thing is, you brought a very good point. There are a couple of things that are going to be a little bit different too, because first of all, I think that like all the Californians who own a Tesla, they also feel extremely conflicted, is my understanding. Like they like the car, but they hate the guy. So like I think that there are going to be some people that, and it's just kind of how politics go. I'm not really like that political or anything. I'm not trying to be, but it's just that whenever there's always going to be a reaction to, and there might be a silent majority of folks that might actually end up adapting Tesla that otherwise wouldn't have. Just like the Cybertruck actually is completely targeted towards like a completely different demographic, So there's going to be some brand changing things, and like Elon Musk, he's a pretty smart guy. Like I don't know what he has under his sleeve and why he's doing the things he does. I think he does things very purposefully, just like I think Trump does things very purposefully. But I just don't know what their hidden intentions are necessarily. So there's going to be some losses, sure, but there are also going to be some gains. On top of that, I can't believe I'm talking about fundamentals with you, but the other thing too, they are developing a monopoly that may not necessarily matter in terms of whether or not the brand is tarnished or not. You're talking about supercharging network. There's
Yes.
really nobody else. It doesn't matter if you hate Elon Musk. You cannot compete. There's nothing. Like there's literally nothing besides the Tesla supercharging network. You're talking about FSD. Who else in the US have capability of doing FSD? If you have other EVs and things like that from other companies, if they want to adapt FSD, who else are they going to go to?
Yeah, from the consumer perspective, you're right. I don't think there's anybody that comes close. Waymo is very solid, very good.
Yeah.
From the commercial side, but yeah, no, I think with those two, you have a good point that where you fill up as far as your EV, where you charge, no one really cares about that. That's not a status symbol. And same with the technology that drives your vehicle. Like if that scales out to other users, like that's one of those hidden things. That's not an open status symbol, so that could see a lot of use.
Right, because a lot of people could be driving a Rivian or Lucid or whatever, like Polestar or whatever, and then they end up wanting to do some kind of FSD. They're going to use Teslas. Like I don't see any other choices. On top of that, I have a hard time seeing how Elon Musk is running the government to be a bad thing for Tesla because of the potential for deregulation.
Yeah.
Yeah, that's like a big thing, which is the reason why I feel like something is maybe happening behind the scene, fundamentally speaking. Now, with that said, did you think that the move from 138 all the way up to 480 or 488, did you think that was narrative driven?
Yes.
Okay.
Mostly, the big shift was Donald Trump won, and that would lead to some deregulation, like whether or not Elon Musk was instrumentally involved in the government.
Yeah.
But I mean, like this stock is very, very much narrative driven. It always is. But there's some fundamentals to it. Like there was some good news that was coming out at the same time. And I think that Model Y refresh, like probably that Model Y is going to be our next vehicle once the rear wheel drive actually comes out. AWD is out there now. That's going to be probably the best selling vehicle worldwide, if not this year, then next year.
Mm-hmm. Yeah, it's tough to know though whether or not the narratives that go out there are a reason to move the price to. It's really tough for me to say. I don't know. Like I do think that there's going to be like constantly a lot of narratives that goes on with the stock just because the CEO is a very controversial man and because it's just a very controversial stock in general, and it does follow liquidity cycles and everything else. So I get that. This is the Ichimoku cloud here. This is Vlad's favorite indicator.
Yes.
The monthly chart for Tesla. And I'm pulling this up. The reason why I do that is because I just find that there is a lot of similarities here between the current point right now to what happened here. Now, can you imagine, and this is in log scale, by the way, because I like to look at these exponential growth assets on log scale. I do the same for Bitcoin. I never look at linear with like Bitcoin, Tesla. It just doesn't make any sense. Same thing with PayPal. I mean, I think it's exponentially up or down. but if you are looking at what happened here, you basically have a breakout of this trend line here, and it looks like it wanted to go up higher, but it just couldn't, right? It got stuck over here for a very long time. I think it's because their business model was still very uncertain at that time, around 2017, 2018, 2019, right? And it got to the point that there are like a lot of concerns about, like, there are a lot of worries about a company in general. That this is like real, right? So guess what happened? It backtested the zone over here and backtested the bottom of Ichimoku cloud, right? And then somehow somebody found that, hey, Tesla is like the bee's knees, and they just push all the way up, right? After they come back and backtest support almost perfectly. And then it just kind of went up here. The narrative right there at that point was extremely poor. In like May of 2019 to June of 2019, it was like extremely poor time for Tesla as a company in terms of narratives, right?
Oh yeah.
Well, yeah, but right now, like it's a completely different beast, and it just went up a lot more. So we needed to deleverage because a lot of people were just like leveraging up the wazoo, right? So price had to go drop from like 420s to like $100 because we needed to deleverage. That you cannot have another bull run without having some kind of deleveraging and shaking people out. Like you just can't do that. And also you need to have like, you have a lot of PE expansion. You need to reset, everything, right? So we end up resetting here for about, I'd say like 4 years, 3.5 years. And the same pattern is happening. You have a hard time breaking above this trend line over here. And then eventually what happens, you're able to break above the trend line here after 3 years. But instead of being like, can you imagine how poor these people feel? They're DCAing Tesla the entire time. And they're like, oh, we got a
Oh
pump.
yeah.
Yeah. And then they keep on
Sure.
DCAing for like 2 years, and then it went back all the way down to here. But we basically pull out the entire move in like 6 months that we pull up here for like 2 years. Back test to the bottom of the Ichimoku cloud, back test the trend line. Basically, this is like it almost feels like it's like a last shakeout kind of thing. I don't know, right? I mean, I could be wrong. Like Tesla could continue to go down, like it break below the cloud and just keep going down. I don't know. I don't know for sure, right? None of these things are certain. But I just think that there's a lot of deleveraging that had already happened, right?
Oh yeah.
And yeah, a lot of the weekend has shaken, and the stock has done nothing for like 3 years. And a lot of stock has gone from weak hands to strong hands, and we're making higher highs and higher lows. Compared to that, this is a bull trend, right? So
Yeah.
somebody knows something behind the scene. I don't know exactly what it is, and that's kind of one of those things. Like if you look at technical analysis, like okay, there's a bull trend. I might just maybe they know something that I don't. I guess is my point.
So do you think this is a question from Mr. McSquared 100? Do you think big money is secretly buying Tesla behind the scene prior to the robotaxi launch in June?
I mean, like there are a couple ways to look. I'm sure you look at this too. Oops, not that. Get out of that. This is like Fintel, institutional accumulation. Like I mean, like just it's the institutions buying. I don't know what else to say, right? There are a lot of financial instruments that they can do to buy stocks without moving the price. They can do it through dark pool and over the counter. They have a lot of different derivatives they can play to leverage. So there are a lot of things they can do to accumulate while the price goes down, which is kind of mind-boggling because you think about how normal market is supposed to work through like supply and demand. It doesn't. Just like Bitcoin, I remember people following these on-chain metrics. So there's no Bitcoin left on like the exchanges. It must go up, right? No, price just kept going down. Didn't care. Because there's a lot of financial instruments, a lot of things they can do to behind the scene to kind of move the price a certain way. But I think that big money is maybe getting it behind the scene. That's kind of what I'm seeing here too. I can tell you for sure, if you really want to look at TA, there is something that I call unbalanced volume, and this is a way to kind of look and see if there's any volume imbalances where if there's exchanges that are selling Tesla to institutions behind the scene over the counter, and it doesn't move the price, then there's going to be like a lot of divergences in terms of the volume versus the price, right? I guess that's that's the best way I can explain it. You can see that during the entire downtrend over here, the vicious downtrend that went all the way from like $300 all the way down to like 138. The entire time, there's a lot of volume imbalances that's happening. You can see that the unbalanced volume has been going up like that, which basically means that there's a lot of buying pressure that is not being accounted for by price. When that bullish divergence, this is what we call it, right? Bullish divergence, price going down, unbalanced volume going up. When that bullish divergence is done playing out, price shot up a lot more, right? That's kind of what's happening right now. There's also some imbalance here too. There's some hidden bullish divergence. Price went up, unbalanced volume actually go down here. That's also a hidden bullish divergence that's happening right now. So I think there is some big money buying behind the scene. I cannot guarantee that for sure because I don't have like the data to like actually show. Look, they buy like dark pool, things like that. Some people might. I just don't have access to that. But there's these like imbalances that I can see that doesn't make sense. Like, why are these prices going down, but there's not any like high volume selling that goes along with it? Well, maybe because the institutions are buying behind the scene, and that's probably why it's pumping up the stock.
Yeah. Well, and fundamentally on Tesla, just some real quick things, and maybe we'll shift to Vlad Tinev's company, Robinhood. I think falling rates, the 10-year is falling. Fed may be forced to cut, and if so, that's going to really benefit Tesla. Like this kind of purchase is something that a lot of people are not using, cash. They are leasing, and it's a meaningful difference if the rates are lower. I also think that tariffs, like if they do stick, Tesla is one of the most American-made companies. Now, they will be impacted from retaliation and other things. It's not a good thing for Tesla, but it's less bad than a lot of their competition. And yeah, like I said, I think that Model Y refresh is going to do spectacularly well. It'll take time to play out. Like I wouldn't expect that in the Q1, Q2 delivery numbers. But by Q3, I think that we'll see that it's meaningful. Like it's a great, great vehicle. They're getting really good at their refreshes. So yeah. Is that you want to talk Robinhood, or is that something?
No. I want to talk Robinhood. Yeah, you were talking about the 10-year, so I was just kind of pulling up here, you know. Yeah, but anyway, I think regardless if well, the narrative is if yield drops, then it's going to be good for stocks. But yield's been dropping, but stocks dropped together with it. So I think sometimes it doesn't have to be like a one-to-one correlation, just like what you say. It doesn't always have to kind of match, but maybe yields drop because they're trying to go to safe haven, buy bonds and things like that, which has been kind of happening. But regardless, I think that if the 10-year keeps dropping, then I do think that financial condition would ease. I just think it's very funny that the 10-year yield had peaked in October 2023, which is when the Russell 2000 bottomed, by the way, that people are still talking about higher for longer. But the Fed did nothing for a whole year. When they first cut rate in September 2024, September 24 when they first cut, right? What happened in September 20? Let me see. Yeah, September 24th when they first cut, yields spiked up.
Yeah,
like the 10-year just like spiked up from like 3.6% all the way to like 4.8%, right? But they started cutting rates. Like, why is that? I thought the Fed controls the economy, right?
No,
but
that's what we were conditioned to believe from COVID. But no, like the actuality is not the case at all. It's a 10-year really that infers most, and there's a lot of factors that the 10-year is collapsing under. Like one of it is like a flight to safety and a safe haven. So more demand as far as buying, and there's a less need to sell that just because of the cuts that Doge is happening, some of the cuts in government. And it's not like substantial and meaningful yet, but there's certainly that pressure there. Plus some other things that the government is doing as well. So all of that part, like I don't know how much, like as far as this whole grand plan of the administration is intentional, but the 10-year certainly is, and it's something that Donald Trump and others of his administration have talked about a number of times. And honestly, a 10-year that does fall into like, maybe we can get to 3%, maybe we can get to like 2.5%. That's good for most of us. There are people out there that are like, no, I'd hate that. That would be terrible. But almost everybody will benefit from that, especially because a lot of us, have debt of one form or another. A lot of people are locked into homes where they'd love to move at some point, and they're not going to get the COVID low as far as those mortgage interest rates, but they certainly don't want to make a change where they'll be paying like 6.5%. So and real estate's still large part of the United States economy, even though it hasn't felt like it over the last couple of years. So, but yeah, it's good for a lot of companies. Tesla is one of those companies that really does benefit from lowering interest rates.
Yeah, I think the mortgage rates, the 30-year, basically mirrors to what the 10-year is doing.
Yeah.
And it's forming. Guess what? It's forming lower high here compared to that, lower high here compared to that, and a lower low here compared to that, right? So it's the downtrend, right? So sometimes trend matters more than what the actuality numbers are. It looks like it's a downtrend to me.
So Robinhood, like fundamentally, like it's a very cyclical company. It's less cyclical than it was in the prior bear market cycle, but it still very much is. So if we get a crypto winter, which I don't know, we'll talk about Bitcoin here. We need to talk about Bitcoin at some point.
Oh man, we have time.
Weird. Like I expected normally in a risk-off environment, which we're certainly in, Bitcoin and crypto just tanks. And I was looking at Friday, I'm like, why is it green? I don't know. But if we get a crypto winter or if we get a bear market, that's going to hurt Robinhood a lot in the short term. That'll hurt the stock. That'll hurt the company. They're still very profitable, but you might have an opportunity if people want to own that company long term. I certainly do, to buy like in the mid 20s. For me anyway, like that seems like it's a fantastic buy. You look at the biggest thing for me is like when I entered Robinhood at like $8 or $9, I was like, hey, there's this golden confluence of higher interest, higher for longer, which is great for Robinhood on one aspect. You got the bull market, you have the crypto bull market as well. These three line up. They have a whole bunch of cash and no debt. They're going to do really, really well. So I just went in all in on options on it, no shares at all. And I'm like, hey, it's cyclical. I want out by really January this year. That would have been actually pretty good timing. But I learned of like, man, this is an absolute killer company with fantastic leadership, with fantastic engineering. They ship products like nobody else in fintech. They really are a tech company. They're excited about what they do. They're not siloed at all. You look at the TAM, like the investor day, it just blew me out of the water. Before that, I shifted and I was like, hey, I want to be a long-term investor in this. And oddly enough, like I do have like a handful of vertical spreads, but I'm like almost all shares in Robinhood just because I know it's cyclical. It's going to be very volatile. Short term, anything can happen.
Yeah, I mean, I think there's a lot of moat with Robinhood for sure, even though even with the bad rap that they've gotten, a few years ago with the whole GME debacle, it's still they are making investment and trading more accessible. Like if I wasn't 80 years old, if I was like 20, like am I going to go with Schwab? No, I mean I'm going to go with Robinhood, right, or SoFi maybe, But
Yeah.
yeah, but I'm not going to like do Schwab. I'm going to do Robinhood. That's just what's more accessible. They have a very friendly interface, and everybody uses it, no matter how bad the rap gets, right? So it's a company that really should not be trading down here. It really shouldn't be trading underneath like the teens. Like that was a crime, right?
No, there's a number on all these companies. Like if Robinhood goes to like 14, it's like, well, I guess I own one position now. It's just like they have no debt, they have cash. I've seen that leadership firsthand. I've seen the engineering staff. I've talked to like 50 different employees from all aspects of that company. They're lean. It's like, okay, the bear market and the crypto winter are not going to last forever. Yes. But I mean, like realistically, it's barring some crazy sequence of events, that's just not going to happen. It's not realistic. So where do you think Robinhood's going maybe in the short term? Are you own this company, right?
Yeah, so my cost average is exactly at $12, right
Nice.
around right around
Better than
here.
mine.
I only bought it. I think I bought it at the beginning of 2000. Yeah, I bought it like January 2024, somewhere around there. Bought my position and just held through the whole volatility up. Don't care what it does. I still don't care what it does. If you are looking at, and I think of Robinhood as an exponentially growing asset in terms of the stock, because I still think that there is a lot of room for it to grow, and it's going to continue to as they continue to build up their business model, as they continue to have younger generation coming in as investors, because I still don't think there's like really any big alternative that is really nearly as attractive as that, right? If you don't look at the log scale, if you just look at a linear, it would look like Robinhood is crashing, right?
Yeah.
like if what are you talking about? Like the price is up to like 85 and like crash all the way down to what, like $6? This is a scam, and then like it's the same thing going to happen again. Like it went all the way up to what, like $67, and like it dropped all the way down to like what, like $32 and even lower. Like this is a scam. Like this is a pump and dump, right? That's why I tend to look at things in log scale, because I am numb to the market. I have like no emotions, and I can handle these kinds of like 50% volatility, just like we had with the yen carry trade, whatever that means. $25 down to like 14, right? I mean, now, do I think that it's hitting some strong resistance up here? Yes, we are. Like, there's no doubt that we are at some pretty strong resistance. Stocks, they don't just go up in a straight line, right? That's just not how it works. You're going to hit no matter how bullish something is, it doesn't matter what it is, no matter how bullish something is, when you hit a certain level, and the algorithms and the whales, and like you said, it might be all like a self-fulfilling prophecy. It hits a certain level, it might get rejected. It might get stuck there. It might need to consolidate until you have consolidated enough and corrected enough, shake out the weak hands, deleverage a lot of people that are using a lot of leverage, then you can go up higher, right? If that process happens for too long and if the liquidity cycle ends up not being favorable anymore, that's when they also crash, right? Right now, I'm not saying Robinhood is just going to like moon from here. That's not what I'm saying here at all. But the 0.886 Fibonacci level, these Fibonacci levels are basically calculated by like the pleasing numbers to human psychology, whatever. Like, I mean, I can go for a whole theory about like how Fibonacci works. All I know is algorithms use them. That's all that matters. Usually there are a few very important Fib levels. One is the 0.786, the other one is 0.886. Another very important one is 0.618, right? These are usually some pretty strong resistance levels. I was very surprised when Trump came in November. It just sliced through 0.618 like it's butter.
Oh yeah, no resistance.
Yeah, no resistance. It's like, poof, I don't care. Well, you know what? Am I going to back test this? Nah, I'm going to keep going up to like the 0.86, right? Like,
I had some covered calls get blown up in that, and it's like, oh man.
Like, yeah,
I just bought it higher, but
exactly why they're doing this, because people are cautious, because people are looking at these Fib levels and they're like, oh, I don't know, I'm gonna sell some covered calls, and like that's exactly why they're doing this too. The same thing's happening with the Tesla. That's why it always overshoots, always undershoots. But basically, like overshoots to 0.618 like there's butter, like whatever, like 0.786. People are looking at that. I don't care. We're gonna go, screw your covered calls, whatever. Go all the way up to 0.86. You can't get through these levels and just keep on making all-time highs on the first try. Like it doesn't generally happen that way, right? You're going to get some resistance here. It's hitting resistance here at these levels, and it's coming back down to back test to 0.618 right now. Does it break down below the 0.618 and go down to this level and flip this level here from resistance to support and erase the entire Trump rally over here in November? There's always a possibility, right? Does it have to? No, it doesn't have to. There's no certainty that it has to. I generally like to look at the 20-month moving average as like a pretty strong support zone. If it does that, then the $24 to me would be a steal. Now, unless the whole liquidity cycle is over and and we're going to like a big prolonged recession, then Robinhood's going to get screwed. Like it doesn't matter,
Oh yeah.
But to me, like if the thesis is still ongoing, if the economy is not screwed, then if it gets down here, it'll be like, I don't know, I bought it down here, I might buy it down here again. Even here, it seems attractive to me. Like if you're interested in like scaling in things like that, I think it's very, very attractive because things have dropped, really by more than like 50%. But I think that this is a pretty interesting level for it to be at right now. I still am a believer in the company in terms of its growth. Again, I don't know as much about the fundamentals as you, like not even nearly as much, but I just don't have, my fundamental thesis is still there. I just think that technically it needed this cool down, and the cool down could be extremely painful. I could have sold up here and I could have bought down here, but that would be a lot of stress. Am I going to wait until it's $24 before I buy back again? What if it doesn't get there, right? Okay, so I can handle the volatility. It goes down 50%. Who cares? I'm up anyway. So that's kind of how my mentality is like when it comes to technical analysis. Like there's some traders out here that they're just gonna be like, "What the heck are you talking about? Do you hate money?" And to me, I'm like, "Yeah, but I don't hate money, but I like how do you say it? I like health."
Yeah, and if this was like some company like without good fundamentals behind it, it'd be one thing. But like they posted over 100% revenue growth in Q1. Like that's not EPS growth, revenue. It's ridiculous. They're not going to do that probably the rest of the year. Harder comps, and we have a slowdown in the markets. But man, they have been killing it in terms of execution, in terms of like the actual company, revenue and everything, product release. Not everything is perfect. I've had some pushback on Robinhood Weekly as far as like, I don't love this. I'm neutral towards this. This is niche, but like it's justified this run up. And frankly, like right here, if I didn't already own 10% of our portfolio and Robinhood, I'd be an easy buyer at this point.
Yeah. And I
So,
also think that I've been buying Coinbase and I've been like,
mhm.
short term destroyed by it. And I think we also had some online, conversations about how Coinbase and Robinhood are, they are going to tap into the crypto market. I think the crypto winter is coming. Doesn't look like it with Bitcoin. I can just like, I like nobody really knows, right? I'm not gonna be here and tell you exactly this is going to happen, that is going to happen. But generally, a bull market doesn't. And I'm going to pull up, now that we're talking about Robinhood, I'm going to pull up the Ichimoku cloud here.
Vlad's favorite indicator.
You had a conversation with Vlad. Apparently, he told you that he liked the Ichimoku cloud. And
Yeah.
I'm just like, what? But this is the Ichimoku cloud. It's all voodoo. None of this really makes any sense. I'm just kidding. You don't need to know the math behind any of this. All you need to know is that you see a cloud here. Can you hear me okay? Sometimes when
Yeah.
okay, you see a cloud here, and that can sometimes serve as resistance and support. You also have these lines over here. There's a blue line here that's called a conversion line. Doesn't matter. There's a red line here that's called the baseline. Doesn't matter what they're called. In a bull market, things ride up on the blue line on the monthly chart, right? Like you can see how beautiful in the 2015, 2017 bull market, like how
Mhm.
beautiful the blue line has been used to kind of push the price up, right? As support, right? Whenever it gets a little bit too far away from the blue line, nope, too far, had to come back and touch it. Nope, too far, had to come back and touch it. You touched it, okay, good. You can go up higher now. Until everything's like exhausted, right? And then it broke down underneath the blue line, and that's when the bear market started, right? So the same thing, I guess the last bull cycle from like 2020, 2021 was a little bit happened too far, too fast. It didn't really like, it was just like straight up, it was just get exhausted really quickly. So here we're having a very, very systematic riding the blue line up. Here it was like back in March, everybody's all euphoric, right? And last year, everybody's super euphoric, right? Well, it's going to go up a lot higher. Well, the blue line's not caught up yet, right? Wait for the blue line to catch up. Oh, it's finally caught up. Oh no, it broke down below the blue line. Oh, it turned out to just be a wick, right? Another, oh,
Mhm.
it broke down there again. Oh no. And then it pushed up higher with it. Guess what's happening right now? We're back to the blue line because things were overextended here back in January and February, right? So I think it's still a bull trend because it's still making higher highs and higher lows. And it's
Okay.
still finding some pretty decent support here. I mean, there are like a bunch of things I can look at. I don't think Bitcoin's done yet, but that's just, there are a lot of people might disagree, but I don't think Bitcoin is done yet. Um, but I can be wrong. I think it's closer to support than is a resistance. So I'm going to remain bullish on it until proven otherwise. But a lot of people might disagree with that. So just to, now if the crypto market is not over yet, I think Robin is going to do just fine.
Yes, yeah. Yeah, like really for it to feel severe pain, both the crypto market and the bull market need to be over. And I think it's pretty unlikely to see both.
Yeah.
Now, were you surprised that Bitcoin held up so well this last week? Because I certainly was.
Yes and no. I think the whole crypto market has been destroyed. If you don't actually just follow Bitcoin, you follow everything else like Ethereum, Solana, or like everything else, Doge, everything else, like they've been destroyed. Bitcoin
Yeah.
is really the only thing that has stood up, and people are like very, very fearful. If Bitcoin breaks down, then like the rest of altcoins are going to break down further, right? Like people are extremely fearful when it came to that. The reality is probably the other way around. I think maybe Bitcoin's actually holding pretty well right now because we're just at that part of the cycle where Bitcoin goes that holds up pretty well, and altcoins just they're not ready yet.
Yeah. Bitcoin
To
dominance.
Right, they're not ready yet. They're just not. And this liquidity cycle is just a lot longer. And I'll kind of show like in terms of what I mean by that. This is Bitcoin, and the price is up here is in log scale, so it doesn't look that exponential. It looks muted because it's in log scale. Below here is the M2 Global Liquidity Index. So this
Yeah.
is the M2 summation from 5 different economy, from US, China, Japan, Europe, and Great Britain. Right. So this is basically a summation of the M2 money supply. Now, you can see that pretty much whenever you have a resistance here with global liquidity, whenever you're going to end up having increased global liquidity over time anyway, regardless, right? Usually with a bear market with Bitcoin is associated with global liquidity having a hard time breaking through a resistance level, right? That's usually when like
Mhm.
liquidity is coming. It makes sense because liquidity goes into Bitcoin. Like, I don't think
Right.
there's any question about that anymore, right?
Especially now.
Right, especially now, yeah. And I actually don't think like the halving matters that much. I think, but anyway, that's also controversial. But whenever it breaks through and have a back test of the global liquidity breakout, here it broke out right to the upside, do a back test here. That's when you have a very, very more impulsive bull run, right? Here, same thing. Over here, you kind of get stuck here for about like a year and a half, 2 years, and then it went, right? Here, you got stuck here for about a year and a half, and then broke out, back test. That's when you had the COVID during the back test, by the way, which is kind of suspicious, and then it just ran up a lot higher, and Bitcoin went up a lot higher with it. Here, we have a more prolonged cycle. Like, it almost looks like we took about 2.5 years, and we're still not able to break about the global liquidity, resistance here. We finally broke out, and we just had the back test of a couple months ago. A few months ago, like January or something like that, right? And now global liquidity is increasing. I think there's a little bit of a lag here, and again, nothing ever has to be like one-to-one in terms of timing. So if global liquidity is increasing, and if China stock market is doing well, and like the Chinese money, they're going to end up rotating to Bitcoin anyway. Like, it's just the way that they don't want to keep the money there. They want to put it somewhere else, and that's where it goes. So I think that might be the reason as to why Bitcoin's holding well. And I think the reason why the U.S. equity is crashing is maybe it's just time to crash, and they've been hitting one thing at a time. They've hit Tesla, they've hit Palantir, a couple months ago. They've hit Tesla a few months ago. They're just hitting everything. Everything's getting reset. Why is Tesla not making a lower low when the market dropped like 10% in like 2 days? Anyway, yeah. But I think that Bitcoin is probably going to do fine. So I think Robinhood's probably going to do fine.
Yeah, I think the global liquidity really could dry up in a global trade war, which is one of the reasons why I was pretty surprised that Bitcoin held up well. But we'll have to see. We're getting close to the end of the time to wrap, and we do want to hit some other names. So let's kind of maybe go through these a little bit quicker on my end and on your end too. But one that I see asked about a lot is SoFi, and so had quite a few comments on that. So. Fundamentally, like, SoFi is in a fine place. It's never really been tested as far as recession, if that's what we end up having. Anthony Noto is pretty infamous or famous, depending on how you want to put it, with the guidance and with expectations as far as macro. Last year, he came in very bearish. This year, made some comments as far as it being like fintech. Well, he didn't say fintech spring, others did, but how fantastic a time it was. Best time for him in the 7 years he's been with SoFi. But then as far as guidance and everything and macro expectations, they came in very, very low. So in times like this, it makes you feel good as a SoFi shareholder. Like, these guys are not idiots. They may not have the same velocity as a Robinhood, but they build for the long term. It's not nearly as cyclical as Robinhood, even though the stock certainly feels like it. So it fell into the eights. I didn't think that we'd ever see single digits in SoFi again. So again, if I didn't have 10% of my holdings in SoFi, I'd probably be buying more here. I'm not. I don't allow myself to do that unless it's a unicorn of a company like Palantir. But I think the company will be fine. The stock will benefit from the rate cut cycle. Their loan platform business gives them basically no appreciable risk. There may be a slowdown in some of their product lines, but that'll be offset by some of their product lines that have been basically stagnant. So like mortgages, student loan refinancing, a lot of lending gets a lot more interesting as rates fall. And I think that Powell at some point, you can look at where we're priced at. I've done this in different videos. I won't pull it up here in the interest of time, but look at the end of the year as far as expectations. The mean, the average right now is 4 cuts. No one was expecting that at the beginning of the year. Cuts in the face of a recession or economic softness are not a great thing, but SoFi will still benefit fundamentally as a business. And it's going to be around a long-term, barring Great Depression 2.0, which I don't think is likely. It's possible. And right now the market, again, is just in a shoot first, ask questions later environment. So we're seeing some pain. So TA side, what do you think?
Very quickly. So I've been buying SoFi. I actually don't. That's the thing about the whole 2023 thing. But they're actually banks that were failing back in May of 2023, which is when SoFi actually went all the way down to the fours. I remember I was buying down here. I was like, what the heck am I doing? Banks are failing. Why am I buying down here? My average is around like sevens, somewhere around there, because I've been buying basically whenever it's like underneath whenever it's like underneath like $8, I try to buy. So I've been dollar cost averaging. This entire downtrend here is extremely brutal, absolutely brutal, right? It was absolutely uncalled for, but it was just forming a wedge to like shake everybody out. It broke out the wedge and it went very, very powerfully on the way up. And when things went from like $5 or $6 all the way down to like 18, nobody thought that was going to come back down again, right? It just decided to do that because it wanted to close this gap over here and grab some liquidity. The same concept that it wanted to burn your cover calls, because a lot of people are getting really super cautious as prices going up all the way up here, to like people thinking that, hey, $10 is gonna be resistance there. It's gonna come back and close the gap here. Nope, didn't care about any of that. Just gonna burn your cover calls. Don't care. Push all the way up to like 18, get you all euphoric, exhaust the whole bull trend, and then next thing you know, now it's basically coming back down and grabbing liquidity back down here at this level. Whenever you have a breakout over a level, back testing it is not unexpected. Sometimes the back test can be so vicious that it can turn into a bear market, but so far it's still a higher low type situation,
and a nice gap fill for those that are into that too. So
yeah, exactly. Like most gaps get filled, not all, but most gaps get filled, and they decided to close the gap here. I think they also closed the gap for like a firm as well. But anyway, that's a different story.
A lot of companies.
A lot of companies, like they just destroyed a lot of fintech over the last couple of days to come back and grab liquidity. Is still more or less trying to challenge the rising 20-month moving average. Like the way I see it is, if the 20-month moving average is negative sloping, it's a little bit more of a bear market. If it's more positive sloping, it's more of a bull market, and things can go back and back test the area. This is a monthly candle, so the month is still young. We'll see whether or not that level holds. We don't know, right? All I know is that things are being way too far overextended to the downside here on the weekly, right? It's just not like, and even on the daily, it's like way underneath the lower Bollinger Band. So it's a little bit unsustainable. I expect minimally a little bit of mean retracement back up here, maybe even to like 12, 13, even may I say even $14, to get everybody all like, oh, we're out of the woods again, and then rock pull year again, go sideways a little bit and go up. I think that's entirely possible.
Yeah. Time will tell. And things just can't go in a straight line. They just can't. Like, we even look back in COVID, guys, if you're not sure about this, it can be vicious over multiple weeks, but even then there were dead cat bounces or dead Cantonese Cat bounces.
Can you imagine like the people that bought up here, they held the entire time, they just waited to sell, right? I mean, like this is what this is, I think. Like they're just waiting to sell. They're like, But anyway, yeah.
By the way, big thunderstorm outside. So if I just disappear, stream's over. So hopefully not the case. Hopefully the power holds out. But let's do two more names for sure. Palantir is one that we've talked a little bit about, and I know PayPal right after that. So Palantir, like fundamentally, like they have just one of the best moats of any company. They've been priced to an extreme, maybe egregious level for a while. I took some gains. It's still my largest holding. I haven't looked since all this drop, but I hedged 90% of my position in Palantir. So I imagine it's probably about 50% of my holdings right now. So that shows a level of conviction, but I'm not a buyer here. I'm going to wait until we may see 55s in Palantir, in which case I'll begin slowly DCAing. And I know if you're into PE, PEG, and those sort of things, you'd be like, oh man, it's way too expensive. It's not cheap, but there's a reason why the market is priced it the way it is. You look at what they're doing as far as, if you've never looked at anything as far as like Palantir, the most useful thing is to look for their AI Pecons. It's the platform that they launched a couple of years ago that others are building on, that has one of those things that people question about AI is like, what's the ROI? Like, what do you actually get in terms of tangible value as a company from implementing? And with a lot of AI products, it's questionable at best. LLMs are certainly there. They're a commodity. What Palantir has built with AIP is very dynamic. It can be used across industry. I think it's an ERP killer. It's used in government, although Gotham is our main product for that. And you look at, the Doge and what Doge is doing. You look at the mentions about Palantir and people being thought of like from Palantir as like being used in the government. It's like half government, half commercial. Both are accelerating rapidly. And during times where it's very chaotic, like COVID and like perhaps this tariff era, Palantir as a business, not as a stock, but as a business tends to do very, very well. So I can rest very comfortably. And yeah, Palantir can fall a lot further. And that wouldn't bother me. I over the next 10 years, I got a pretty good understanding of where the company is going. And there's just, they have such a strong mood. So from the TA level, what do you think?
Yeah, I pull up the Palantir monthly chart here. I put it side by side with Bitcoin because they're completely relevant to one another, because they're totally in the same industry. I'm being sarcastic, obviously. Um, but I just think that there are a couple of things to kind of think about here. One is maybe it's like the same algorithm. I don't know, or maybe it's like the fact that both of these were having or are having very strong momentum. So this is Bitcoin from 2015 all the way to 2017, right? When everybody thought they couldn't go up higher, it just decided it doesn't care. It just wants to keep going higher until it gets some crazy FIB levels above, right? I think that there are actually a lot of people that are extremely bearish on Palantir right now. That's maybe that's how the cycle ends. I don't know. But as I was showing you on Bitcoin earlier too, right? On the monthly, it was just kind of riding up on the blue line, on the conversion line on the way up. That's kind of what Palantir is doing. Actually, they look very extremely similar, which makes me wonder if they're following some kind of like similar algorithm, where the 0.618 was back tested, and then also back test the blue line up here, and then it decided to do that and just ran, right? Because once you break about the 0.786, usually you make all-time highs, right? Once you break the 0.786, usually make all-time highs. Mm-hmm. And Palantir has how many green candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, or something like that. Like it's just, yeah, it just hasn't had a break, right? And it's taken a break.
Yeah,
it got rejected at a FIB level where Bitcoin got rejected at the same FIB level before, right? And it's stalled here for a couple of months. Here it's stalling for a couple of months, right? And it back tested blue line down here, right? It's back testing a blue line down here. So I'm not saying that it's going to do the same thing. That's not what I'm saying here at all. I'm saying that I would not necessarily expect $45. It doesn't have to. If it does, then yeah, I mean, like either something extremely is wrong with the economy, or that is a great buying opportunity, or both, right? Yeah, but if it ends up going back down here, and in terms of like valuation scares and things like that, like there's a reason why their valuation is this high, because I honestly don't know. Like, and this is a software company; they're not manufacturing things like Apple. Like they don't need like an infrastructure like Amazon. Like if they want to grow and they want to take over the world, they can. So.
But by the way, on that, like one fundamental thing, like they're just prescient as far as like what is coming and what products to release. They kind of messed up with Apollo, like in the past they had like a product as well that didn't do well. But like AIP was timed almost perfectly. Boot camps timed almost perfectly. And not just full platforms, but even like sub products. So, as far as ontology, they ended up doing ODSK or OSDK, ontology software development kit, which has gotten a lot of traction. And then they introduced something. Was it like 6 months ago? Called Warp Speed, which was really about helping companies that were nearshoring in the United States, actually just like literally coming to the United States, bringing their manufacturing from overseas here to the United States and helping them be able to integrate that just like they would like back in Japan or wherever they were from. And that was at a time where like really nobody knew who was going to be elected, and there wasn't nearly the push as far as like tariffs and everything. It was a mention, it was a thought, but like they launched this product, it's gained a lot of attraction, a lot of interest, and they're very good at what they do. So like fundamentally, like the stock can do anything. I can sleep like a baby with this company. No debt, no like short term. I would not be buying here personally.
Yeah,
and I wouldn't be buying with money that I need in the next 5 years, but like further out, like especially if you mentioned, When it gets to 55, like that's where I start DCAing again,
Yeah.
which is weird, because my average is in the 12s.
Yeah.
Or if we get to 45, like that DCA, I will increase. Like, even then, it looks expensive, but man, quality companies can be expensive for a long time, even in bear markets.
Yeah, and I think initially there were some valuation concerns that even you have when prices all the way up, like to triple digits. Like there's no, yeah. But at this point, I think it's like a hold for me, because you can always drop down further, but you have some pretty interesting support, and you have already dropped down like 40%. Again, things can always drop down a lot more. Just because it dropped like 40% doesn't mean it's not going to drop down another 40. Like it doesn't matter. But to me, I still think it's a hold. I probably wouldn't buy here at all, because again, my cost average is also in the teens. So yeah, just hold, sleep well at night, and just let it do its thing.
55 is fair value for me, so it shows you where we're at. I still think it's pricey, but
interesting. Well, the 20-month moving average is around 40.
Yeah, I mean, like if it hits there, great. I will definitely add. And my hedge at that point, like it's like, well, I won't worry about it too much. So PayPal, and then AMD. I've got a lot of requests on AMD. So PayPal, as far as like fundamental, the valuation makes no sense. It's not trading based on valuation. It's trading like a company that's going out of business. We're seeing the opposite. Critical bear issues, which actually bears are right on. When Alex Chris got in, he diagnosed the company, and it was fundamentally weaker than I had expected. Under Dan Schulman, it's very heavily siloed. They weren't innovating well. We knew that. But they ended up just having a lot of issues, with deteriorating margins, as far as like Braintree, as far as PayPal branded. Like they just weren't iterating at the speed as everybody else. And so they weren't really losing market share much as far as branded. Like that's one of the narratives. Apple Pay supposedly killed PayPal. Apple Pay came out like a decade ago. So, but there were a lot of issues. Now, Alex Chris has rectified a lot of those. We're going to see a record all-time high active users. We've seen a lot more transparency. We're seeing margins continue to inflect upward. We're seeing transaction margin dollars increase, which is their net dollar figure. Look at their free cash flow. It was stagnant for a long time. Actually would have decreased in 2023 if it wasn't for a one-time sell, divestment of Happy Returns. But now we see real bottom line improvement. The problem is with the previous CEO, it was all about top line. Alex Christie's like, no, top line's great, but if it comes at the cost of bottom line, makes no sense. So it's being priced like a company that is it's dead. And like at the current market cap, they're buying back more than 33% of their shares over the next 3 years. That's ridiculous. At the same time as you look at the innovation that they're coming out, that none of it's priced in. Advertisements not priced in. Guest checkout, which is winner take most, if not all, not priced in. What they're doing with the stable coin as far as offsetting it with margins, with cross-border stuff, not priced in. Do tariffs impact PayPal? They do some. If we have a global trade war, it will be a hit. The biggest thing, and one of the reasons for the drop that I alluded to earlier in this with PayPal last week was in the EU, they mentioned specifically Google and PayPal, but I think they were just example names. They said if the United States tariffs us like we expect, then we can also retaliate against individual companies. Didn't go into details, but the two they mentioned was Google and PayPal. And boy, PayPal dumped that day. And it was like, okay, I didn't see PayPal being singled out as a tariff target, but
it's weird. Okay. It's very weird.
So painful.
Yeah.
PayPal. So TA stuff. Help me out.
Yeah. No, I mean, it's extremely frustrating. I mean, I was actually dabbling in and out of PayPal too, because I do see a bull trend. I do see that it was really forming a huge base. I do see that it's going to break out about this is a monthly chart, so the big giant drop all the way from July that really since like February 2021 all the way down to June 2022. I monitor these things because whenever I did not think that stock's going to end up going up until you're really able to claim the 20-month moving average from resistance to support. That's just not going to be the case, and it's been such a vicious drop that it's just not going to do that until it reclaimed it, right? Well, after so long, after it bounced from low Bollinger Band, after like challenging the 20-month moving average for like months, it finally broke above, right? So that's a bull trend. Yay, flip from bear market here to bull market, right? It's just been extremely vicious. It was a surprise to me too that it went all the way down here. I saw this move coming on the top because whenever you have a bull market, usually you're not just going to moon. You're going to end up just starting to have a very nice, leg up. And then the monthly bullish band here, which is basically calculated by like standard deviation of the stock price, unless you have a lot of huge volatility, you're not going to get the bullish band expansion. And unless you're the bullish band expansion, you're not going to go up. You're going to have this being resistance. And it basically was using as resistance here in December and January. During the entire time, you also have a lot of exhaustion here as well. So this one I actually saw the down move coming because you have ours, like your price base is just making an equal high here, but RSI has dropped, right? You know this thing's rolling over, right? I just did not expect it to roll over like this.
No, I never thought we'd see 50s again. I saw 60s as a possibility, 70s is the likelihood, 50s is like, no, it's probably not going to happen ever. Wrong.
Like I would expect, I thought it was going to hold the zone over here because look at how a lot of resistance up here, a lot of support over here. I thought it was going to hold that zone around like mid 60s, but no, it's just how vicious this whole thing has been. Maybe it's the macro. Like Vlad would have been very angry because it broke down underneath the Ichimoku cloud. Initially, I thought it was going to hold there, but it just broke down. It's just absolute downtrend. 2 weeks, same thing, broke down. Monthly, it broke down below. Like you had this is like a little bit of bullish cross, if you will, between the blue line and the red line, but it broke down underneath both, so it didn't really matter. Right now, it's just like hovering at like this lower level over here, which is just absolutely insane to me. It's pain pal. That's what it is.
Yeah.
As long as this is not gonna be like a lower low compared to these wicks over here, it's still a higher high, potentially equal low type situation. So I still think that overall, I would like to see it reclaim the 20-month moving average and really build up a bull trend from here. But sometimes things, when they backtest, they just overshoot it. And when they do, it takes longer. That's just what it is. But it's trying. Like it's definitely not a vicious bear market anymore. It's becoming flat and just oscillating around this 20-month moving average. I just want to see it reclaim it, and it's unfortunate. So
and I'll share one more thing. Like if somebody's like not new to PayPal, like top line revenue growth is being slowed deliberately, just to trade off some volume for higher margins from Braintree. So you will see the revenue. It's a 5% headwind to the top line revenue. So don't get too excited about revenue for the next 2 quarters of reports, maybe 3. There's going to be that slowdown. So it could well be that we're just kind of stuck in this range for a few quarters. That wouldn't be shocking. AMD is the last one. Fundamentally, just real quick from me, Lisa Su's great. I think it's a good company. This is one where I'd just rather be in Nvidia. I see Nvidia as a clear market leader. Jensen Huang is a one of a kind. I'll go with him over AMD. If Nvidia didn't exist, I might probably be an AMD shareholder. But that's the way I see it.
Yeah. On the technical standpoint, I think since 2016, it's just been running up nonstop. So it went from like $1. How low did it get? It was like $1.61 in July of 2015, and it went all the way up to like $164.46 with very little break in between. And the entire time as it goes up, it just looked tired to me. Like especially this move up here from August 2020 to like November 2021, it was on bearish divergence, and it was playing out. It had basically in 2022, it got tired and it just reset the whole thing, right? Well, you're trying to push back up again. You again make another higher high here, but again, that was on bearish divergence again. It just didn't have enough energy to push through to go a lot higher, and it just looked tired. And because of that, and it's like a part of correction that is needed since like 2015. That's basically what I have to say, technically speaking. But the other thing too, initially, and this is brutal too, because initially I really thought that the 0.5 FIB level and the top of the Ichimoku cloud, I thought that was going to hold. Kind of like how it held over here, whenever you had the 2022 downtrend, it held at the cloud and just bounced off the cloud and just went up higher, right? And the entire time as it goes down, it was also going down on declining volume. Like there's not really a whole lot of sellers. They're just dying to sell AMD. So the lower the price gets, the more the better risk reward ratio would be. I just don't know. They can always tank the stock down a lot lower on declining volume. I just don't know like how low it's going to get, right? So looking at 0.5 was a reasonable level. It looked like it was going to bounce, but nope, decided, rug pull, push down through the cloud here this time. And it looks like it wants to get to 0.382 or maybe even to the lower Bollinger Band, which is unfortunate. Like this is a very, very unfortunate situation. But the entire trend, like time is going down, kind of like how it did. Actually, if I get rid of all this stuff over here, kind of like it did back in 2022, right? It was going down on declining volume. So the risk reward ratio increases as it goes down on declining volume, right? Same thing over here with this downtrend for 5 months. You have basically volume kind of going down, drying up, right? So maybe a little bit of seller exhaustion. Here, you would have thought the seller would have exhausted, but no, it just keep on going down. It's extremely vicious. I don't know where the bottom is going to be. I do think that maybe like around the high 70s with like some of these horizontal levels over here and over here in the low Bollinger Band, that might be the area. And it's just absolutely vicious. I got tempted at buying AMD, but I was looking at the chart. I was like, you know what? Nvidia is showing weakness. I don't know if I want to put my money onto AMD because it just doesn't like I don't know about the sector, so I just ended up like staying away. But
yeah, sometimes doing nothing is the right move. So I'll do 2 quick questions right quick here, and then we'll do final thoughts and wrap. So on this, Steve asked us earlier, if you get a moment, Roy, would you give your opinion as to whether a tariff deal with Vietnam will impact Nike? Nike sources a lot of their material. I think that's the majority out of any of the countries that they're in. I know they're in China. Was it Indonesia or India? I don't remember the third, but yeah, if they Vietnam makes a deal and like they're one of their competitors like Decker, I don't know them at all. And we won't do the TA here for farming education this time, although Cat may do that on his own channel or make a post. Be sure to follow him, by the way. But if Vietnam makes a deal, I think ideally the administration hopes that that'll just have ramifications for that whole region. But if not, those that are in position in Vietnam and their competitors are not, they're going to do a whole lot better. And it's easier for them to shift volume in a country that they're already in meaningfully versus like if they just have a toehold or not even that. And then the last thing here, Iceman, do you guys think we'll see circuit breakers get activated the coming week? I'm going to say no. Again, circuit breaker is down 7% on the S&P 500. That has happened 5 times in history. Once the circuit breakers were implemented after 1987, the infamous Black Monday, which, by the way, if you're worried about that, I've got a short video kind of outlining why it's basically impossible. It's not impossible for the market to dump another 20%. It's just not going to happen all in one day, probably not even in 1 week. And I don't think it's very likely at all. But even a 7% down spike is very unlikely. We saw it get close on Friday, but 4 times it happened in COVID, once in 1997. Outside of that, never again. Think about all the different things that the world has been through in the past 40 years. Like, there's times that we're a lot more fearful and turbulent than right now. So all I'm saying is it's pretty unlikely, but don't be surprised to see a lot, and I mean a lot of volatility, probably to the downside in that pre-market. It can look like, oh man, we're going to trigger, and then on open, it may be a very different story. So what do you think, Kat?
I think that if I have to guess, Monday is going to be a down day for the SPY and QQQ. The reason why is because I didn't see a wick here at all. I think we mentioned that. Yeah, I think we mentioned that at the beginning. I didn't see a wick here at all. So like, the funds were really getting blown out, and there's like not enough buying pressure to even push price up by the end of Friday. So most likely you're going to end up having some bearish continuation on Monday.
What the wick signals, guys, is basically there's buying pressure pushing it up. So at least we didn't finish at the very bottom. Sometimes, not always, but sometimes that means that selling pressure has been, at least in the short term, alleviated, barring for the catalysts. We don't see that. That's not a guarantee that we're going down on Monday, but I'd be pretty surprised if we open up with anything other than red, barring a fundamental shift. If there's a bunch of deals made or some great news out there, anything can happen.
Yeah, I think they might be scrambling to get funds to try to buy. I know who knows, but it's way too far overextended to the downside. But because it just didn't seem like it was able to stop the bleeding on the end of Friday, most likely you're going to end up having some further bearish continuation, at least at the beginning on Monday. So,
all right. Well, this is where, let me star this. This is where you can find and follow Cantonese Cat. So be sure to follow him. YouTube, also on X. And glad that you are around. Glad that you agreed to do this show. If you guys enjoyed this, be sure to put in the comments. Maybe we'll do it again next month. And I think it's great to look at markets, look at names, look at macro from different perspectives. That's one of the reasons why I follow you. Is I'm like, I don't want to be in an echo chamber. I don't need to be around another 200 Roys, because I know how I think, and I can get it wrong, and I have blind spots. We all do. So this was really helpful, I thought, today. Any final words or thoughts, Kat?
Can you believe that you talked to some faceless cat for like 2 hours?
Can't believe it. I don't even know if you're human. So
meow. I don't know. No, but I appreciate the back and forth in the comments and things like that. I think we've always communicate with each other well. We share ideas very well. So I just didn't. Maybe we were too ambitious today.
Yeah. Yeah. No, I knew we'd go along. Like, you're easy to talk with. I figured that'd be the case. Just chatting with you on X. So this has been a good one. Thank you all for tuning in. It has been a long one. Happy investing. Until next time.
All right, guys. Take care.